Hi friends, Simit here from informedtrades.com. In this video, we're going to take a look at how to trade markets that are at all-time highs or all-time lows. As always, if you have any questions or anything to add, you can join us over at informedtrades.com. Thanks and enjoy.
Okay, to help understand how to trade markets at all-time highs and all-time lows, we'll be focusing on the gold market, which is currently at an all-time high. On the screen right now, you see the candle shown on a weekly chart, which shows gold breaking out to its all-time high. Okay, so in terms of how to trade markets at an all-time high, one of the first things that we'll want to do is simply wait for a pullback. Again, the challenge, or what can be a challenge for a lot of traders with all-time highs and all-time lows, is the fact that there's no clear resistance for an all-time high or support for an all-time low. A simple way of solving this problem is to simply wait for a pullback. On the screen right now, you see the two areas that are highlighted around the 1020 level and around the 980, 990 level as potential support levels where gold could pull another point along the way is acting as resistance, and we have a support level. So we're back in familiar support and resistance territory. Another thing we can look at is March or April 2008, it reached a high of about a little over 1,000. And then in the second half of 2008, we saw a big tumble back down to around 700. So we can sort of look at that recent retracement and then project it forward. So for instance, one recent pullback that we had was from 980 to 700, which is about a 280 pip movement. We can take that and project it forward, add that on to 980, and then we see a 280 pip price target from 980 puts you around 1250, around 1260 at that level. So projecting forward based on previous support and resistance levels is something we can do when we're at all-time highs or all-time lows. And of course, with that recent projection, that was when you're projecting forward. It also depends on what support resistance level you're looking at. A more conservative one would be a smaller step forward, which is what I did in the previous example. We looked at 280 pip pullback. But if you want to go from 1040, I believe it was, or 1030, around there, the high that was reached in March of 2008, all the way back to the low in the second half of 2008, that's a 380 pip move. So we could tack that on to 1040 or so, and we see that gold could be breaking 1400 based on that projection. Perhaps something that or another tactic we can do is look at markets that are correlated to the market that's at an all-time high or low, and if that market's not at, or if the correlated market is not at an all-time high or low, we can use support and resistance trading based on that market to trade the market that is at an all-time high or low. You see the dollar index is not at an all-time high or an all-time low. In fact, right now, or at the time of this video, it's at sitting near a major support level. Meanwhile, dollar index is inversely correlated to gold. So gold goes up, dollar down, dollar up, gold down. So based on this chart, we could say, all right, looks like dollar's at a major support level. If it breaks this, using major support level of 7150 on the dollar index, that could also be a point where we'd want to look out of long, possibly look to get out of long gold positions as a point that the market might bounce off of for when we're trading gold. Another thing to consider when markets are at all-time highs, all-time lows, are three techniques: Gann lines, Elliott wave theory, and Fibonacci fans, Fibonacci lines. Those are not subjects that I'm too familiar with. We do have courses on one of them. We do have an Elliott wave, some videos on Elliott wave at informedtrades.com. And of course, we'll be adding more on those subjects as well. But those three techniques are often used in projecting forward. In terms of, trading is largely about technical analysis, which helps us precisely identify entry and exit points as well as how to manage the trade. But fundamentals are something that are maybe extra important when markets are at all-time highs or all-time lows. There is a fundamental story that caused the market to get to a point of all-time highs or all-time lows. It's important to understand what that is. A lot of people who are looking at fundamental analysis don't understand the real fundamentals that are underlying it. If you understand the real fundamentals, then you can understand if those fundamentals are changing, or if they're continuing. If they're continuing, that's another sign for the trend continuing, the all-time high or all-time low trend continuing. With the case of dollar and gold, one of the major fundamental factors is monetary policy. The U.S. Federal Reserve in particular has had a very loose monetary policy, which has resulted in inflation or a weak currency over the past 10 years. This policy seems to be continuing, which would suggest bullishness for gold. Of course, there are other ways of looking at it. But if we understand what's been the primary fundamental factors that have been driving it, that helps us understand what to look for in terms of a change that could pull us back into away from all-time highs or all-time lows, or whether all-time highs or all-time lows that trend will continue. That's about it. If you have any questions, or anything to add to this, you can join us over at informedtrades.com. Thanks and best of luck in your trading.